Hello everyone. Last week we discussed about the valuation of Nifty. Similarly, this week let's discuss about the valuation of Bank Nifty and the present problem in it, like what's making it to underperform and when it will change. So without delay, let's get started. First, a bit of recap. As of 6th September 2024, this year so far, both Nasdaq and S&P 500 increased 14%, and in line with that, Nifty also increased 14%, which is good. But on the contrary, Bank Nifty increased only by around 5%. Similarly, if you see the earnings, till the date this year, Nifty earnings increased only 14%, whereas on the Bank Nifty side, it increased by 18%. If required, please pause and have a look. It's not showing in the graph, but I backtested it. So if you see the past couple of years before December 2023, Bank Nifty and Nifty increased or decreased happened roughly the same percentage, only max 2 or 3% difference. However, that difference gap in Jan 2024 widened to over 7% and now increased near or above 10%. So basically, despite the earnings increase, actually Bank Nifty underperformed Nifty. Why? I mean, different period of time, it's different issue. Here in this region, Bank Nifty underperformed Nifty because of the liquidity issue. I mean, at that time, literally RBI has to conduct the variable auction rate every 2 weeks for almost 6 to 7 months. This VRR is always little bit costly. The more banks uses it, the more it will eat up the profit. So, market didn't like it. However, at present, there is no liquidity issue as Indian banks got the liquidity surplus of about 2 lakh crore rupees. I mean, honestly, it was created and caused by RBI intentionally by controlling the money supply again to control the inflation. But as I said, we don't need to worry about it now since again RBI started to print money, hence not a problem anymore. Then from this July month onwards, it's new problem, low deposit growth and high credit to deposit ratio. I mean, liquidity concern is a genuine reason, but this deposit growth issue, I won't buy it. If required, please pause and have a look. This one graph tells all the required story about the deposit growth issue. Before 2020, credit growth was higher, but deposit growth was lower. Then only during 2020 and 2021 due to pandemic, banks were afraid to issue the new loans. So at that time alone, deposit growth was higher and credit growth was lower. That then again changed back to original state from 2022 onwards. So this higher credit growth and lower deposit growth is not at all new to the Indian banks. It was like that from April 2022 onwards. As we see here, always in the last 5 years, deposit growth was roughly between 10 to 12.5%, very steady. But loan growth is not like that. Between 2020 and 2021, it was below 10%. However, in the last 2 years, Indian banks started to give more loans than the deposits, but not like crazy high, somewhere between 14 to 15%. So overall in the last 2 years, for the average of 11% deposit, Indian banks were already giving 15% average loan. Hence, as I said, it's not a new problem. Always it was like that only. Banks always managing the extra loan by issuing the bond, etc., which also considered as deposit, but that won't come under this RBI bi-weekly releasing data. I mean, the top 78%, 76% and 72% are the total Indian banks altogether credit to deposit ratio in each respective year. Now in June 2024, it was around 75%, which is better than 2019 and 2020. And in addition, if required, please pause and have a look. This is the SBI, ICICI Bank and Axis Bank's deposit and credit growth over the last 1 year period. Here SBI is the best, ICICI Bank is good and Axis Bank is okay. And none of these 3 major banks got this low deposit or high credit to deposit ratio issue. But what is not okay is HDFC Bank. I mean, before merger, they too okay, but after the merger, because they got a lot of additional housing loan which added into the credit side, but deposit didn't grow as it was expected. So at present, only HDFC Bank got the credit deposit ratio problem, which is around 104%. all other major banks are perfectly okay in terms of credit to deposit ratio perspective. In addition, another problem HDFC Bank have is, as we discussed multiple times, it's FII shareholding. I mean, before merger, HDFC Bank's FII shareholding was around 33%, whereas at that time, June 2023, HDFC Limited's FII shareholding was near 63.5%. Thus, when they merged, the FII shareholding in the merged entity increased from 33% to roughly 55%. So, any good portfolio manager will liquidate at this scenario since it's too much exposure on one single stock and huge risk. So, FII started to sell, and now from that 55% they dropped to around 47%. Honestly, I don't know how much FII will liquidate further, or probably they might freeze it here, which is not at all in our control. Hence, these two big uncertainties are there in HDFC Bank. One, in order to improve the credit deposit growth ratio, HDFC Bank has to slow their loan giving at least for another 1 year, which means less profit and earnings growth. And second, there is no clarity around how much more FII will liquidate on their shareholding. Here, we know HDFC Bank's weightage in Bank Nifty is around 30%. Hence, 30% of Bank Nifty expects to drag down in the next 1 year. Again, I can be wrong. This may happen or may not, but for valuation perspective, let's assume that. Then, based on CRISIL rating, we can expect for 2025 financial year banking credit to grow around 13 to 14%, and if HDFC Bank drags down that by 30% means, then we can assume the whole Bank Nifty credit expects to grow 10%, and that 10% is roughly equal to 8% earnings increase, which means 2% earnings increase every quarter. I hope everyone able to follow me. Now coming to the valuation part. At present, Bank Nifty's PE ratio is 14.8, which is the lowest value in the last 10 years. And last time Bank Nifty was this low was during the taper tantrum issue 2013 to 2014 period. And at that time, Indian economy was very fragile, and in fact, Morgan Stanley named India as Fragile 5. But at present, Indian economy is not that bad, so we can consider PE ratio of 15 in the Bank Nifty as a fair valuation. And during 2014, multiple times, Bank Nifty took support at 12 PE ratio, which is the worst case correction scenario. But for present day, let's assume Bank Nifty to take support at 14. I am not seeing it go above 16 with the present negativity around. So let's consider the 16 as uppercase immediate resistance. Now, if we plot all those in the Bank Nifty value like low PE, high PE, nominal, then this will come like this. If required, please pause and have a look. For the present day, the immediate optimal range for Bank Nifty is 48,250 to 55,150. On 13th September, it was trading around 51,930, which is around the nominal value, and the immediate defense support for the present earnings is average PE value 51,500 to 51,700 range. And for the deep case correction scenario, the first line of support will be at around 48,250. So this is the present scenario. Now coming to the future, as I said earlier, let's assume Bank Nifty to increase 2% earnings each quarter. Then at the end of October 2024, this 51,700 present nominal average point will move to near 53,000. Here, as usual, these arrows represents the earnings variation. If the earnings increase, then that arrow will change accordingly. Since in reality, anything can happen. It can be 5% increase or 2% decrease. In those cases, all those points will change. Hence, between now and November, the fair valuation of Bank Nifty's range is 51,700 and 53,000. And if we assume another 2% increase in the subsequent December quarter means, then at Jan 2025, the present average 51,700 fair value will further increase to 54,000, and in May month next year, it will be near 55,100. Just a cautious note, if the global momentum deteriorated in future like recession or new conflict, this valuation is not applicable. In normal scenario, in Jan 2025, Bank Nifty unlikely to drop below 50,200 mark, and in best case scenario, Bank Nifty can go all the way towards 57,400 mark. Hence, just based on earnings, if we assume 4% increase from the present level, which is possible and the most probable scenario, then the range for year-end December 2024 will be between 50,000 and 57,000. One more interesting stats for option traders. If required, please pause and have a look. This is the percentage of each index option volume, like how much every month it trades. As we see, except during the election time, other than that, for most of the time in the total index option trading, Bank Nifty is the major one and it always holds volume percentage of around 45%, whereas Nifty is in the range of only 35%. So Bank Nifty is more popular in option trading than Nifty. Anyway, just repeating final time, this Bank Nifty range and analysis projection is for present day earnings 3,446 rupees and expectation to increase 4%. If it didn't or tomorrow earnings dropped to 2,500 rupees, then it's a complete different story. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.